Hi everyone, Megan Marsh here with Select Mortgage in Erie, Pennsylvania. Today we're going to talk a little bit about mortgage down payments. When people call and they ask about mortgages, they want to know what is the best way to finance their mortgage and be able to put either the least amount down or how does it affect the loan if you put a little bit more down. And the reason it's so important right now is because rates are extremely low. You can get a 30-year fixed rate mortgage in the range of 3.875 to 4%, 4.125, depending on what your credit score is. And when rates are that low, it hardly changes your payment the more you put down. $1,000 more only changes your payment by $4.70. So some people, they think, okay, I'll put $10,000 more down. Will that help my payment? It only helps your payment by $47. So right now, borrowing money at that low interest rate is really, really appealing. So I wanted to show you, with the type of financing you're doing, how much money roughly you'll need to put down. So I made a little list here, and these are the different types of financing. So you have conventional loans. There's a lot of different types, but for the most part, if you're doing a conventional loan, you're going to need anywhere from 5 to 20% down. So 5% down would be the least amount you can put down. There are some programs conventionally where you can put 3% down, but they're income restricted, so you'd really need to make sure you could do one of those first. FHA loans are very popular, especially for first-time home buyers. FHA loans require a 3.5% down payment, whereas the rest of the costs, the closing costs and prepaids, can be paid through seller's assistance. Then you have VA loans. If you can qualify for a VA loan, if you're a veteran and you have a certificate of eligibility and a DD 214, you can get a loan with zero down. There is no down payment. And if the closing costs are paid for by the seller, you can literally get into a house with no money. Then there's what's called a USDA loan. It's the U.S. Department of Agriculture. It's just like a VA loan for houses that are rural. They have to be found on the rural maps, but we do them here locally. We do them in Waterford, Corey. We've done them in a lot of different locations. And then last on my list here is PHFA. PHFA, they do all these other types of loans, but for the most part, you need 3 to 3.5% down. But the biggest thing with PHFA loans is they have a down payment assistance program. So you can get $1,000 to $3,000 of down payment assistance depending on what your household income is, how much money you have in your bank accounts. Last month we closed 2 different clients, and I think they put a total of about $900 into the home that they purchased, which were in the $70,000 to $90,000 range. So that's a great program. And then lastly here, I just wanted to show you, if you look, there are certain types of houses that they're a little bit different with their down payments. So condos, if you are going to look at a condo, make sure you talk to your loan officer because every bank is different. A lot of them will only do condos with 20% down. We have banks who do condos with as little as 5% down, but we have to be very specific on where we place it and where the condo is located. Second homes, same thing. Some places will only do it with 20% down. There are banks that will do it with 10% down. Investment properties. You need 20 to 25% down now on an investment property, even if it's a single family home. Manufactured homes, that's another one to keep in mind. Manufactured homes, you need 20% down for conventional, 3.5% down for FHA. And then lastly, a 2-unit. Even if you're going to live in a 2-unit, you can do 3.5% down if you go FHA. But if you go conventional, you can't get mortgage insurance on it, so you'll need 20% down. So I hope that helps. If you have any questions, you can email me at Megan, M-E-G-A-N, @selectmortgageerie.com. Otherwise, thanks for listening.